Okay, so let's carry on through the watch list here. One of the things that I was paying attention to this week was Bitcoin, seeing this confirmation of a breakdown right here, catching a little bit of a move here. That's just easy money right there. Major confirmation that Bitcoin was just going to tap 60,000, and we actually did get rejected off of 60,000 there. So I think Bitcoin may be ready for a bounce. We'll see what happens with like liquidity and such as it gets sucked out of stocks. Then who knows? We could get a small little bounce here, or we could just slam through 60,000. And in that situation, then this is not looking great. Like there is a lot of downside on Bitcoin after 60,000 is hit. There'd be a move from 60,000 to 50,000. That is really the next support line. If you zoom back on Bitcoin, you have a little bit of support right around this area. That's a 60,000. And then you get a pierce right through 50 back in 2024. So that's the area that I would be looking for. I would probably re-enter into a short position on Bitcoin. This would again be pretty easy money, and it would happen probably in a couple days, if not like two. So that's the Bitcoin chart. I know a lot of investors are looking at UNG. This chart is actually holding up quite well. So considering everything else that's going on in the market. UNG still looks pretty good to me. We're in this parallel floating upward right now. One thing that I'm just paying attention to, I want to see that break of that 200-day moving average. I want to see that come up and actually get into this area right around here above 1270. Like I said, look for that confirmation, but don't get faked into it. So what is confirmation? We need to see a pierce through the 200-day moving average. And then the next day we need to close above that pierce. So if we close like right above here on the pierce, then the next day has to close somewhere right around here. So pay attention to that. Make sure that you don't get faked out, like it's going to pierce and then come back right back down. That's what we want to avoid. Look for that confirmation signal and then move into UNG. So we'll pay attention to that. Let's go over oil because again, people kind of disregard oil these days, and the market is kind of just ignoring it after it being everything. The market is now paying attention to stocks and kind of disregarding the fact that we're still at like $95 or $90 oil. So this chart probably going to trade in a range here. We got rejected off the 50-day moving average. We're probably going to come back and test 85.73. Not really interested in going either long or short any oil stocks because what's going to end up happening is Donald Trump is going to come out of nowhere and announce that the Iran war is essentially over. And then you're going to see a decline of like 10, 15% or something like that on oil. Temporarily, who knows what's going to happen in the long run. It's too like you're going to get sucked into the news. So I'm not interested in playing oil at this moment in time. Like I said, the 10-year treasury still looking at 4.8% on that. I see some sideways chop, and look at this. I drew this potential path line a little while ago. We got the first bounce. I wouldn't be surprised to see a little bit of a move down lower. That would correlate with the markets going higher, like I was projecting this week. And then maybe we'll make that run to 4.8%. I think that's what the chart's telling me right now. We'll see what happens. Maybe we don't get a resolution to the Iran war, and that's where interest rates go to 4.8%. Hard to see. We'll play it by ear there. GDX, this is how we were playing, or why we were playing dust. Basically, we came into that 200-day moving average, and I was thinking, okay, we're going to probably break that 200-day moving average. Gold is looking like it's going to decline. So that way, that means the gold miners are going to decline even more. And then Friday, what do we get? a massive move to the downside there, 6% to the downside in a single candle. That resulted in 12% positive move in dust. Unbelievable setup, really. All we were paying attention to is this head and shoulder pattern. And then we were following this trend line right here, and it got rejected and then moved lower and lower. So really good setup on GDX. Glad to pocket a nice little gain here. I'll skip over gold and silver. We went over that in the watch list, but I will go over Franco-Nevada. This is part of the stoplight stock section. Again, breaking that 200-day moving average. So this is our sell signal. As long as we close lower on Monday, then that will be a sell on the stoplight stock section. GDXJ. This one, again, a major breakdown of that 200-day moving average. This is confirmation because we got the close underneath here of the 200-day moving average. Here's our confirmation candle. Look for lower lows on the GDXJ over the coming 2-week period. So this is our sell signal. GDXJ must go. BBU, it's playing perfectly on this trend line right here. You know, you got the do or die situation. I missed this. This is so unfortunate because it pierced here for like, I think it was like 20 minutes, an hour or something like that. Wasn't paying attention to the stock. And yeah, we had a rip to the upside right to this resistance point. And basically we're just creating a massive wedge pattern. And that would go support right down here, wedge pattern right down here. And once we decide where we're going, are we going to break to the upside or are we going to break to the downside? I mean, who knows? But right now, I'm thinking about removing BBU from the watch list, from the stoplight stock list, because this stoplight stock list is meant to be a longer term kind of portfolio and just watch list. And this is breaking down into a downtrend. So not looking good on BBU. I set this as a sell signal a number of different times over the last few biweekly reports. So one that I'm definitely seeing red flags on is BEP. So BEP is near the top of this channel here. And take a look at this massive topping tail on this chart. This is not broken into a downtrend yet, but it's very likely to do so. I could honestly see what ends up happening is you get sucked down into here, have a few little bounces, and then we're probably going to come back down to this area of support, maybe a bounce, and then break to the downside. So this right here, amazing exit point on BEP. If you're holding BEP right now, this I'm marking this as a sell. This is a must sell Monday. You have that massive topping tail on the chart here. Now we could come up. We could come up a little bit, like we could break up here, trade up here, and then not break that topping tail and then go lower here. So don't get faked out. Like this topping tail, exact same thing that's happened with silver. I am calling the top on BEP right here, and we're going to watch it trade to the bottom of this parallel, and then we'll see what happens from there. Are we going to break the 200-day moving average? Because by the time we get down there, the 200-day moving average is probably going to rise and follow this channel here. So if I were holding on to this, I would be a seller. And that's how I'm going to mark it on the stoplight stock section. Oops. Let's move over to MOO. Currently holding this right now. Like I said, we were about to get that recovery in MOO. We were trying to they were trying to fake us out on MOO, but I said, look for the confirmation signal. We didn't get it right here, but we're on the very edge. Like this is really unfortunate. We're on the very edge right now, minus the major drawdown that we're seeing in SOX. Then I think this would have recovered at least to the 50-day moving average, but it's getting sucked down into the market. Like I said, I want to give these stocks a little bit more leeway and make sure that, you know, what's going to end up happening is once money rotates out of stocks, then you're going to see it rotate into these dividend paying stocks, the safer kind of plays. And agriculture is definitely a safer type of play. It's always going to be necessary. MOO is a basket of agro business type of stocks. And I think money is going to rotate into here because the dividends are actually getting pretty decent. You got a 2.29% dividend on MOO. So give this a little bit more leeway than we had initially kind of initially kind of thought about, because I was thinking like, okay, if we break that head, then I'm out. But the only reason why we're breaking this head right now is because the market is just getting sucked up by everybody exiting stocks. So we're at the 200-day moving average right now. If we break the 200-day moving average, and especially if we break this, okay, then I will say, okay, we got to get out. But right now, aside from stocks, sucking up all the liquidity in the market right now, I think we would have got that recovery in MOO. So I'm going to give this one a little bit more leeway. And those are the levels that I'm watching. SRUUF. I almost pulled the trigger on this. I was waiting for that confirmation signal. We got that big green candle right here. No confirmation, no follow through on SRUUF. Didn't pull the trigger. And I'm so glad we didn't, because look at this, like massive red candle. Actually, no, I shouldn't say massive. It's 3% down, but it looks like a large candle on the chart here. And now we are at the bottom of this range. Like I said, wouldn't be surprised to see a slight recovery, but we got this resistance point right here. And this is what we're trying to break through. So now on top of that, you're under that 200-day moving average. I feel like it's probably going to recover, but let's just wait to see if it actually does. URNM. So I would just hold off on this one as well. Like I said, we got that big green candle. This is essentially following exactly SRUUF, except with more volatility. 9.45% drop on URNM. And if SRUUF is going lower, then so is URNM. So both of these have to be listed as a hold. But those are the levels that I'm watching. NTR actually looks a little bit oversold right now, but we are creating a wedge right here. So you have the downward sloping resistance right here. We're probably going to run into this 200-day moving average. It'll play out something like this, just trading like sideways and down. And then we're going to hit that 200-day moving average. And maybe we could get that breakout, but I want to see the breakout happen before we do anything with NTR. So listing this one as a hold in the stop buy stock section, but this buy zone, this is where we want to accumulate, and it could happen during this next 2-week period. So let's just pay attention to NTR. Dividend paying stock, very much affected by the Straits of Hormuz. This should be higher right now, but market participants are essentially saying that the straits are going to be opened and it doesn't really matter. Like NTR will come back down when the straits are open. But now we've come back down so much that when the straits actually do open, we could get a pop on NTR. So list this one as a hold for now, but I want to see that breakout, and then we'll look to enter into NTR. Glencore. Looking a little bit toppy, looks like it's kind of wanting to run a roll over here. I would list this one as a sell because we're very close to 636, which is like the top resistance point right here that I was highlighting. And on top of that, we're near the top. We're essentially getting, we tried to break out of this little channel that I have highlighted in green, and then we're kind of dipping back into it. So I'm going to list this one as a sell because we're right near resistance, and we are a little bit overextended right now. Look at this. If this drops to like the 200-day moving average, that's a 20% decline. So let's preserve some of the gains that anyone is holding in Glen, and let's sell this off. And look for movements to the downside. EWZ, I am currently in EWZ. We're right at a resistance point right here. Like I said, I want to give this stock a little bit more leeway because the market is just getting sucked up. Liquidity, everybody's running to liquidity right now, but like I said, this level should hold. And outside of this liquidity event that we're having right now in stocks, this level will probably hold. So I just want to give this one a little bit more leeway. Look for extra confirmation to go lower. The must sell kind of level, I would probably place somewhere. Let's give this one like maybe down to like right in this level right here. Let's put a horizontal line right here. So let's put, like, if we were to enter into a decent sell off, let's give this one 12%, and then for sure cut the loss at 31.39 or so. I don't think we're going to get down there, but like I said, it could happen because everybody is rushing to liquidity right now. I think from here, we're probably going to get a recovery bounce. Outside of a liquidity event, I think we should bounce actually right here. Like this is why the reason why I have my stop loss like set right here, but I think I'm just gonna allow that to have a little bit more wiggle room on EWZ. So I'll list this one as a hold. Let's go to HEF. Right now, I thought, we were going to get that breakout, but again, the liquidity event is real and it's sucking everything down in the market right now. So I guess I could remove this potential path. This is probably not going to happen. Outside of a liquidity event, I could have seen this run to 28.85, but I don't think that's going to happen right now. We're probably going to looks like we're going to come back down, touch 25.61. But this could totally reverse this week. So look for a breakout of 27.30, like I said, with confirmation. So a break above, and then the next candle should be above that breakout. Like we want to close above that breakout. So 27.30 is the level that I'm looking for. Go list this one as a hold for now. This is wheat. So wheat has not broken into a downtrend, despite, us breaking out of this major parallel. We still have an upward sloping 200-day moving average. So I could see us coming back down, touching 21.74, and then getting a bounce from there. So gonna give this one lots of leeway. I want to make sure that, we're going to stay above that 200-day moving average. Right now, the only reason why I think we're getting this movement down through the parallel is because people are searching for liquidity right now. So gonna list this one as a hold. I will hold my shares. Right now, corn has broken out of our parallel, but still has not entered into a downtrend yet, despite us breaking through the 200-day moving average. Like I said, outside of a liquidity event, I could have seen this going much higher. But look at how many down days in a row we have. 1, 2, 3, 4, 5, 6. I'm betting 7 is a green candle, and it's going to be a big one because this green candle is going to come after a 6-day move downward and then touching some serious support. So if I had some extra cash right now, I would actually be buying the 1706 level. I do have a little bit of cash right now, but I want to make sure that, these levels actually hold. So I'm not going to pull the trigger on that one just yet. And we have not entered into a downtrend. We're just coming into major support, and look at how far back this support line kind of goes. Multiple areas in 2024, multiple areas in 2021, multiple areas in 2018. So this one should hold here. But like I said, if we go into a major drawdown in all markets, then this is probably going to get sucked down lower. So my final straw on corn is going to be 1706. And if we get that confirmed breakdown, then I will be a seller. Cane's on the watch list, like I said, following that potential path that we talked about, just coming up, touching the 200-day moving average, and then getting a little bit of a bounce kind of, or movement lower. Now this, I guess you could say this is kind of like a micro bull flag. So we'll be watching this one kind of closely, and let me I'm trying to draw this out here with a quick parallel, something like this. That would be a micro bull flag. So maybe we get a little bit of a movement upward once we break above this flag. But like I said, we're probably just going to hold that resistance point that we've been talking about for a little while, which is this downward sloping wedge. I want to see this pull back to 904, and then we'll maybe look to swing trade that, because like I said, you got a lot of room. Like say we touched it somewhere around here, then you got like 7% upside to the 200-day moving average. You could pull it off on the 200-day moving average. So listing this one as a hold right now, just watching that wedge. That's really what is driving this movement in Kane. And until that actually breaks out, if it breaks out to the upside, okay, then it's game on. But if it breaks down to the downside, then you got to let this one go. XLP, this is one of the only greens. Look at this whole list. There's only two things green: US 10-year Treasury bond, and where did I say capital's going to rotate into? Consumer staples. And it's the only thing green on this watch list on Friday, which is amazing to see. We are back in this parallel. So here's the breakdown outside of this parallel, but no confirmation. This is not a confirmation signal. This is not a confirmation signal. We need to close lower than that initial breakdown. So here's like the tail, right? We needed to close like down here for that to be a confirmation signal. This right here, amazing. Like this is such a great sign. We're back in the parallel after just like a fake out, and now we are actually slightly in the green on XLP. So look for this to just like continue to see capital rotation into XLP. Would I be a buyer on Monday? Yeah, I would be a buyer on Monday if I was looking for a place to store cash. I would definitely consider this probably my top pick right now in terms of where money will rotate. It's going to be consumer staples, especially if oil continues to decline. Like if this just continues to go lower, once that Iran war announces like an end is announced on the Iran war, we're probably going to come back and touch 76.58 on oil, and that will be amazing for consumer staples. So pay attention to this. I'm going to list XLP as a buy here because we got that bullish signal back here. We retraced to the 200-day moving average. This is an uptrend. This is a confirmed uptrend. We are going likely higher on XLP. So we're going to ride this as a position trade, and I'm just going to monitor that all the way through. So that is the stoplight stock section with a detailed breakdown of everything in there. Like I said, I'm really paying attention to stocks this week, making sure that, we don't break above 13,120. That's going to tell us that the top is in on semiconductors, and then just follow this head and shoulders pattern. And whatever stocks does, the market is going to do. But market by the time all the big money exits stocks, that big money is going to start to get deployed in other areas. We're already seeing big money go into consumer staples. So the question is, are we in the right stocks right now? And I think we are. That's why I'm not going to sell off MOO. I want to see some market action like this right here. This is smart money accumulating right on a point where, traders are going to sell out if we break underneath here. That's why we got that initial break. There's the confirmation, right? And then we got the green candles back up in here. That's smart money going into these dividend paying stocks. I think EWZ is going to get accumulated as well. And I think XLP is going to be the top picks. I want to see wheat and corn kind of recover and just trade upward or even sideways is fine with me. I want to position in these stocks for the long run, because I think what's going to end up happening is we're going to go into a recession, and there's just going to be a massive amount of government money creation, and it's going to send the price of a lot of commodities a lot higher. And that's when you probably get that breakout of gold somewhere around, I don't know where it's going to be. Like if you take this all the way down here, and if we, pull back to here, maybe even pull back to like 3,500, and then we get that break, that's going to be a sign that all commodities are going to enter into a massive wave upward. And if wheat and corn just trade sideways for a little bit of time, that's fine with me. So that's where I'm going to leave it. Thanks so much for watching. Thanks so much for being here on the Biweekly Report. And I hope you enjoy. If you have any questions, reach out using the inbox on Substack. We'll see you in the next one.